Have you ever wondered when the majority of individual investors would be able to purchase and afford Tesla stock? Even while skeptics and ardent Tesla supporters continue to attack the industry leader in electric vehicles, experts predict that Tesla stock will continue to surge to unprecedented levels. This is one that you most definitely don't want to miss. Many investors believe Tesla has enormous potential, particularly considering that it was the pioneer of the electric vehicle industry. ARK Invest thinks Tesla will stay at the top of the electric car market, particularly if it's the first company in the US to successfully implement autonomous driving. She continued, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years by 2026, that is." Founded by Cathie Wood, ARK Investment Management LLC, also known as just ARK Invest, is an American investment management company that oversees a number of actively managed exchange-traded funds. Investors looking for long-term development in the public markets might find investment solutions from ARK Invest, which only focuses on disruptive innovation. Wood is the creator, CEO, and CIO of $60 billion asset company ARK Invest, which makes investments in cutting-edge technologies like genomics and self-driving cars. Wood is regarded as a star investment in ARK's 2021 open-source Tesla model and is frequently referred to as the most underappreciated investor. The company stated that it expects its share price to reach $3 in 2025. Indeed, Elon Musk, the CEO of Tesla Inc., claimed via his staff that he agreed with Cathie Wood when she declared that Tesla has a market value of $3,000 per share. According to Musk, if the business does well, it will be valued at approximately $3 trillion, making Tesla the most valuable firm in the world. A share of Tesla will be valued at $3,000, he added. With a valuation of more than $700 billion, Tesla is currently regarded as the most valuable automobile company in the world. However, in light of significant modifications, such as estimations of capital efficiency and assumptions and inputs related to autonomous ride-hailing, Cathie Wood and ARK Invest have since revised their position, and the prognosis has been advanced by 1 year to 2026. Based on their examination of consumers' perceived value of time, ARK Invest has updated the IR model, which now includes updated assumptions for the whole market for autonomous ride-hail at each price point, and the likelihood that Tesla will solve for completely autonomous driving. More demand than initially predicted is anticipated for autonomous ride-hails at higher price points. The revised model indicates that ARK has set a price goal of $4,600 for Tesla by 2026 and came to the conclusion that there is a 25% chance that in a negative scenario, the value of Tesla shares in 2026 will be $2,900, and in a bullish situation, it would be $5,800. If this occurs, only the wealthiest Americans will be able to purchase Tesla shares, making it unaffordable for the majority of Americans. With a decrease from $84,000 to $7,700, Tesla's capital expenditure per extra unit of capacity has improved. Formerly, ARK anticipated that. Tesla would invest $6,000 to $8,000 for each additional unit of capacity in 2025. However, as of right now, the company projects that it will only invest $2,000 to $7,000 for each additional unit of capacity in 2026. To find out the precise performance of Tesla stock, visit Moomoo. As per ARK Invest, the potential robo-taxi business line of Tesla is a significant contributor, accounting for over half of the estimated EBITDA profits before interest, taxes, depreciation, and amortization, and 60% of the expected value by 2026. Although at much lower margins than the revenue from robot taxis, they project that electric vehicles will account for 57% of the company's revenue across the simulation set in 2026. ARK has revised the way the robo-taxi industry fits into the model due to their growing confidence in Tesla's capacity to accomplish complete self-driving. Despite their earlier predictions that Tesla would never be able to introduce autonomous ride-hailing, they have since changed their minds in response to recent encouraging developments from the company and now project that it will come in 2026, 4 years later than Musk had anticipated. Additionally, they predict that Tesla will begin offering automated ride-hailing in 2024. Nevertheless, in 9% of their model scenarios, Tesla fails to provide robo-taxis within the allotted 5 years. In the event that robo-taxi becomes commercially viable within the projected time frame, Tesla's model financial outcomes may vary depending on the year of launch. In the event that Tesla launches its robotic taxis successfully in 2026, the projected value will be the mean of 1 million simulations. The year that Tesla ultimately introduces robot taxis will have a significant impact on those simulations. Tesla launches a vertically integrated human-driven ride-hailing service, but does not establish a robo-taxi network in the majority of ARK's lowest price per share scenarios. In other situations, Tesla does not deploy either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, ARK has already discussed the tactical and strategic benefits of doing so. Significantly, before Tesla introduces a fully driverless service, human-driven ride-hailing may develop into a successful recurring revenue source. ARK predicts that Tesla's human-driven ride-hailing vehicles would eventually switch over to the autonomous ride-hailing network in the event that the company introduces a human-driven ride-hailing service and solutions for completely autonomous driving. While attempting to find a solution for complete autonomy, Tesla may introduce a human-driven ride-hailing car if it is unable to establish a robot taxi service in 5 years. Conversely, in the numerous price per share possibilities presented by ARK, Tesla introduces a robot taxi network within the next 2 to 3 years. According to a published article, ARK Invest feels that their Tesla model is methodologically cautious, even though it is calibrated to our forecast for 2026. In 2026, we predict that Tesla's stock will behave more like that of an established business than a fast-growing one. With the recent 3-for-1 stock split taken into account, Tesla's price reached an all-time high of $414.50 a few months ago. However, due to a sluggish economy, the stock has since dropped by more than half and touched a new 52-week low of $204.16 this past week. Nevertheless, there is still a lot of business potential for Tesla, particularly in the long run. Wall Street is constantly in a heated discussion over Tesla's valuation. At $680 billion in valuation, the corporation is 14 times larger than Ford Motor Corporation, to use just one example. In the electric vehicle market, Tesla has a clear first-mover advantage thanks to its current 2 million unit yearly manufacturing capability, a number that Ford doesn't anticipate achieving until 2026. Volkswagen Corp, one of Tesla's biggest rivals, claims that the company's inventive production process sets the standard in that area. Tesla presently holds the largest automotive gross profit margin of any automaker. A more efficient production process results in cheaper expenses and more profit. In the most recent third quarter of 2022, it was 27.9. Additionally, Tesla is a pioneer in the field of self-driving software technology, which is expected to generate over $2.1 trillion in revenue by 2030, according to some projections. The business may regain the lead on that possibility when its fully autonomous robotaxi is scheduled for release in 2024. Other automakers could need to wait a lot longer to develop this technology since it needs years' worth of real-world data. Then there are Tesla's other ventures, such as the production and storage of solar energy for homes, which are in such great demand that the company is finding it difficult to meet demand. Additionally, the company unveiled Optimus, a revolutionary humanoid robot that has the potential to completely transform the workforce at this year's Tesla AI Day. In spite of all of its problems and obstacles, 2022 has been a significant year for Tesla. With the opening of 2 brand new gigafactories in Texas and Germany, it was able to double its yearly production capacity of electric vehicles from 1.05 million to 2 million. In fact, Elon Musk, the CEO of Tesla, stated that the company hopes to open up to 12 more gigafactories by 2030, producing 20 million cars a year. Additionally, there is the robotic taxi industry, which has the potential to completely alter mobility. It is anticipated that Tesla's model will not require any human interaction at all, which has the potential to completely transform the logistics industry and revolutionize how we move about. Experts estimate that Tesla will likely produce cars at a run rate of 2 million per year, and Wall Street analysts project the EV business will make roughly $120 billion in sales through 2023. Therefore, provided that vehicle prices stay at current levels, Tesla's yearly revenue may surpass $1 trillion by 2030 if that production number increases tenfold. If this occurs, the price of Tesla stock will undoubtedly rise to the point where the majority of regular investors can no longer afford to purchase shares in the industry leader in electric vehicles. Although Tesla's stock has dropped 41% so far this year, it would be naive to concentrate on what might occur in the upcoming months or even the coming year, considering the plethora of opportunities this firm could seize over the next 10 years. Because of this, experts think that investors should think about grabbing advantage of the current decline in Tesla stock, regardless of the state of the economy and the unstable stock market. To get more content about Tesla stock, subscribe to this channel.